Hello, welcome. This is Spectertrader, and today we're going to go over our Sunday night market prep. So, all right, let's see. I'm sure you noticed on Friday we had a pretty liquidation on Chinese names, Chinese ADRs, and certain media companies like Discovery and Viacom. And that was in part because we had a margin call by on a hedge fund. Pull up a little screenshot. It's Viacom and Discovery. Uh, Basically, Archegos Capital got margin called because they're pretty heavily exposed, and yep, they were liquidated out of $15 billion, $15 billion position on these names, and they had 80 billion gross notional exposure, which is pretty big. This was the biggest liquidation event in recent history for an Asian prop shop. It was founded by this guy named Bill Huang. He is a Korean prop shop trader. Probably you might have heard of him. Yeah, so the past month, we've had an environment of rising rates, which was not the best environment for SPACs, especially SPACs, and several other names such as like Growth. And the reason why I want to focus mainly on SPACs right now is because I'm sure you guys I've noticed a lot of people in this Discord is heavily into SPACs. And
What should we be watching for this week?
yeah, so SPACs. Well, okay, I'm gonna go over like a basic overview of what SPACs are first. So SPACs are basically it's a way to commoditize the private equity space. So it allows average investors to actually capitalize on this. But the problem is you have Wall Street bringing up so many companies. Like they just start creating a crap ton of SPACs, right? And not every single target they bring to the market are high quality. So you got to be careful when you're buying these SPAC names. Now, I'm not saying IPOs are necessarily better. They both have their pros and cons, but essentially Wall Street is using this as a way to make money, and you get this overcrowding in a lot of these SPAC names. I mean, there are really good SPACs out there. It's just what I'm trying to say is don't just buy every single SPAC that's being hyped up. Yeah, so when you get this overcrowding in any name, not even SPACs, but like any stock, you get a lot of retail guys and all this hype around it. It gets too many people on one side. And when you have too many people on one side, it gets really ugly fast, because when you have a liquidation, when we have the capitulation day, it gets really, really exaggerated to the downside. And I mean, it's not very fun getting caught in these sorts of liquidations. So that's why I'm just saying exercise caution in certain sectors that are maybe overcrowded. So yeah, this past week, it's been probably for many a really slow week, and these types of weeks you should not really push too hard, because there isn't really many opportunities in the market. It's just pure choppy price action. You know, you get the shorts trying to bet on the downside, they get chopped out. You get long positions, the longs trying to bet on the long side, and they get chopped out. You know, they try to play breakout, and then they just get absolutely destroyed. So yeah, basically the market had no direction really. It's just going sideways in the range. And the only thing you could do in this environment is, and we're not even in the peak earnings season. So it's like there's not really much of a catalyst for any crazy direction or any false like crazy opportunities. You basically yeah, you basically have like a very low like minimal opportunity environment. So all you could do really is do quick trades. And what I mean by quick trades is yeah, you could do like a few day trades and maybe like an overnight swing, you could buy a stock that's been beat up pretty badly, it's overextended and you could play it long, but you're not going to you're not gonna overstay on this because if you're not flexible and nimble, the chop is gonna kill you, and that's how you get, stopped out, really. So, yeah, there's not really a definite uh, so I wanna go back to, like, these types of situations, there's really no definite, um you don't really have a definite idea when stocks in the market is gonna go up, but when things like this happen, it's okay to take you can take you it's okay to sit back and like watch the market. You don't always have to take a position because if you think about it, cash is a position too. It keeps you safe, because the name of the game is you don't want to just jump in a bad trade and lose money. You only want to take really good setups because you the thing about trading is the thing about trading is it's not just making money that is a key, but you want to preserve your capital too. You don't want to yeah, you don't wanna take these bad trades and you end up taking unnecessary losses, that's just it's bad principle and it's bad for your account. That's why I'm exercising just trying to say, just be flexible and be cautious in these types of environments. And yeah, I mean, we are going towards the end of the quarter, so you might see some volatility. Overall, I would say the market looks really great to the upside. I will get into that in a bit when I go over the futures and indices. Let's see. Let me look at my notes real quick. Yeah, you could say that this market is it's a bit different from a few months ago. A few months ago, everything was just trending higher. It was very strong. But now it's a bit different because you don't have much sweeper activity. So the market is tough. You get all this chop. You can't just buy random names like a few months ago and make money. In a choppy environment like this, you can't be too fearful or eager. Yeah, so this past month we had some rising rates, and you know, if you take a look at specific sectors or names like specs and growth stocks, energy, EV names, all been hit pretty hard. It's because you get all this. You had so many people on the long side on these names, and a lot of these guys, not even long term guys, they're like almost like gamblers. They're they're rushing in these names. They're all hyped about it, but then when things turn sour, you see an exaggerated move to the downside, and that's what happened in the last month. A lot of people uh, took a lot of heat on their accounts, and I think it's very important to pay attention to market context and the overall market sentiment for sure. But yeah, as we go into the end of the quarter, um, I think that we should be more stable because a lot of pension funds have to rebalance their portfolios because a lot of funds have an equal amount. Especially if pension funds have an equal amount of bonds and equity. So when it comes to the end of the quarter, and the bonds sell off, but their equity positions are performing stellar. Like, I mean, it causes a massive imbalance in their portfolio. So what they have to do really is to sell their equity positions and buy bonds. So they were forced to buy. Um, so when they buy bonds, I think that's going to stabilize the rates, and basically people who are like rushing into these higher rates plays are going to get stopped, are going to get stuffed at the highs. So I would be careful trying to bet on inflationary names at this current moment. Let's see. Let's Yeah, so going to the Nasdaq now. Nasdaq. Pull up 1 hour chart. Yeah, if we look at the Nasdaq on a daily chart, you see in the past, about the past month, we tested this consolidation high of 13,300. We keep testing this level, but the more and more we test it, it becomes a weaker resistance point. So I would say it's a matter of time before the Nasdaq is bound to break out. So me personally, I think that tech names are actually a great risk reward opportunity. And well, so there's two ways to play this. You could either buy in anticipation, or you could wait until we confirm the breakout. So like I said, if you buy in anticipation, it's not a bad idea to maybe buy on some dips on these tech names if we have a little pullback early on. But if you want to play it more, if you want to play more safe, I would say, you could always wait for a breakout. I mean, if you guys do trend lines, you can see, we're pretty much holding. Hang on. You can see we're pretty much holding this trend line, to the downside. It's a little bit rough about drawing, but you get that idea. But what you could do is you could wait for us to test the trend line high, and if we break out above it, then that would give you the confirmation or the long trigger to buy the dips on any tech names, because that gives you confirmation that we should have another leg up on a Nasdaq. So now, looking at the ES, S&P. So so in the last week, we did test a very key level on S&P, which was like I mentioned, 3890 to 3870, I believe, was the level I was talking about. We did have a little price exploration below that level, but we didn't have much follow through to the downside. Actually. We had relatively light volume, as you can see, pretty light volume. So we pretty much rejected this low, and we actually came back quickly on the same day back to 39, and we closed at 3,900. And that just shows me that we had some overextension to the downside, and since we had a lack of follow through, we got the short sellers all trapped. And I mean, none of them wants to hold going into the weekend, so they realize, oh crap, now this is bad situation. So you had all this short covering, and the shorts did realize that there's someone defending on the lower end, right? Because that's why we rejected so quickly. If there was no if there's no one buying at these levels, then we would easily have cracked and held lower. But we caught some bids, trapped the shorts, and caused the shorts to unwind. So we had some multiple stop runs on the way up, and I mean, it's crazy. Friday, we had like an end of the day rally, which was absolutely insane. I believe the actual S&P made all-time highs. Yeah. And now we're just chilling above this breakout area. So I would say overall the market looks good to the upside for sure. Okay, now I'm going to go into some swings. All right. Let's see. AMD. Yeah, one name I'm looking at, and I think is a really good. I mean, you guys in the Discord have heard me talk about AMD time and time again on about holding it long term, but I would say at these prices especially, I mean, this is a consolidation low. It offers a very great opportunity if you want to swing trade it. You could buy here with a stop under the lows, or if you're a long-term guy, I mean, you wouldn't really be so price. You wouldn't be so picky about price, and I mean, this just gives you a great opportunity to get a very great entry on AMD, and I think AMD is a very good long-term hold. Like I said before, it's high growth. There's high demand because it is very involved in 5G, and there's like a massive chip shortage. So something like this deserves like a PE of 50, and this is expected to grow over the years. So I wouldn't be surprised if AMD grows to 50% every year. So in the next few years. So that's something to consider. Let's see. I think these Chinese names offer a really good opportunity too. I mean, the only reason why we had such massive selling is because you had these hedge funds getting margin called, and these prop firms, getting margin called, and they ended up having to liquidate positions. It wasn't anything because there's a big fundamental problem with the stock. It's just these funds are being over leveraged, and yeah, it just got ugly for them. But something like Baidu, I would say, is a good risk reward play, as well as Baba. I think Baba is a really good opportunity right here. It is pretty cheap, I would say. You have TME, 10 cent, from 32 all the way down to 16. Vips is another one I'm looking for an entry on a swing. I think these names are really good. Let's see, 46 all the way down to 24. So yeah, any decent dip on these names, I would say, is a great entry. And you could always spread your averages out so you could get a better average. something like yeah, something like Nvidia, like a tech name. You could always yeah, like I said, you would watch the Nasdaq. So you could always buy in anticipation, or you could wait for the Nasdaq to break out, and then any dips you would basically buy on all these tech and semiconductor names. Another name I'm looking at for a swing is DraftKings. I think DraftKings, pretty nice drop, I would say. Oh, shoot. In the low 60s. I would say it's not a bad entry for a swing, and it should give you at least 5 to 10 points on your average. Another name I talked about is ACB. I've mentioned this many times in previous webinars. ACB is a good name. Like I said, is a longer term swing for me, playing a whole sector wide push. I think it's at a pretty nice level to start or even add if you're already in this name. And Palantir is another name I'm actually currently in. If you haven't started it, it's not a bad entry here. With a stop, well, okay, if you want to keep your risk tight, you gotta have a stop under 21, because if it gets under 21, then there is a big air pocket here. We could easily fade back to like 15, 16. But if you want to play it more loose, or you play more long term, then you could have a different strategy. It you should only trade based off of your plan. So whatever you think is the best way to manage your risk and play these names, I think you should always stick to your plan. And I mean, you don't always necessarily have to follow me. It's just, for me personally, I would probably stop out. Okay, so we have a few economic events going into next week. So on Tuesday, we have at 7 a.m. Pacific time, we have CB consumer confidence. So basically, it's like a leading indicator of consumer spending, which accounts for majority of the U.S. economy. I think the U.S. economy is like 70% consumer based. Yeah, it's basically a survey of 3,000 households. Ask respondents to rate the relative level of current and future conditions, which could include labor availability, business conditions, and overall economy. The next event we have is on Wednesday, 18. It's the ADP non-farm employment change. And that's just basically the estimate of the number of unemployed people during the previous month, excluding the farming industry and the government. Just looking at, it just basically looks at early employment growth ahead of the employment data in 2 days after. See, Wednesday, 7 a.m., we have pending home sales, which is pretty self-explanatory. 7:30, we have the crude oil inventory. So I would watch that if you're trading crude oil futures or any energy names. I think it has a lot of weight. So I would watch that. A very important event is on Thursday. It's the OPEC JMMC meeting, which is all about oil. So they're going to be discussing their policies and how much oil they're going to produce. And the meetings are close to the press, but they will talk about it with reporters throughout the day. So they'll give like formal statements. So I think this is very, very important for any energy names for sure. I mean, even it could even affect like the whole broader market. So this is a very important thing to pay attention to, I would say, on Thursday. And on Friday, we have a few important economic uh, data reports. We have the average hourly earnings, the non-farm employment change, and unemployment rate. So Friday should be very important. And yeah, that's pretty much it for economic events. But yeah, is there any questions? We are pretty much done going over the whole market overview. So I'm going to be moving on to a quick Q&A session before we close up. Do we have any questions? Let's see. Hello? Cool. How was it, Alan? Yep. Yeah. Buy the fucking dip. uh, no, but I mean, yeah, buy the dip, but yeah, I mean, buy the dip on. Um, uh, buy buy bond futures. uh, yeah, yeah, yeah. So yeah, they are pretty slutty. They're usually very range bound, but you might see some pension funds buying bonds, but that's kind of like speculation. Well, I mean, they do buy they do rebalancing towards the end of the quarter for the reports. So yeah. Well, you wanted yellow.